So what I wanted to do to start with is explain to you what an order block is. So an order block is basically a candle of the opposite colour when a high or a low is formed, a new high or a low is formed. So these are breakers. Let me go down to a lower time frame. Okay, so this is an order block. This is drawn in automatically by the order block breaker indicator. So as you can see, we've made a new high here. So the order block is the last down candle before that high was formed. Okay, so this is in effect the block of orders of the opposite direction that gave this move the power to make this new higher high. So if we start down here, I'll just quickly draw some on the chart. So you see the high was formed here. So the order block that would have created that one would be this down candle here. Then we made a new high just here. This one's higher than this one. So the order block would have been this candle here. New high here. Order block would have been that candle there. There's another new high formed there. So the last down candle before that one is there. We would also include often the wicks to the left or the right of the candle, typically to the left, but basically that's the order block that created that high there. This new high here, when this was formed, was created by this candle here, and so on and so forth. So basically that's what an order block is in a nutshell. Okay. What the indicator does is it automatically draws order blocks onto the chart for you. So these orange blocks I've just been drawing, this one, as you can see, I can't change this. This one is being drawn by the order block breaker indicator. Okay. So basically that's what it does. When price closes down below an order block, it becomes a breaker, and that is when we get our alerts, and that is when we're interested in looking at the charts. So basically the way that price moves is it moves in waves, making higher highs all the time. Eventually it will make a lower high, and that is a break in market structure. So the market structure is highs, lows, highs, lows, highs, lows, highs. When you get a break in market structure, we then start making lows, highs, lows, highs, lows. So it's basically moving up and down, and that's how price basically moves in markets. It moves up and down in waves. So when we get a break in market structure, the theory is that when a price has moved down and broken down, it will then pull back and then continue down in that direction. So all this order block here is doing is it's propping up price. Think of it like it's propping price up as it moves higher. When price breaks down below this here, that is what we call a breaker candle, and this will basically be coloured in to a solid. So if I move up to another time frame, just clear that off. So basically what will happen is you see the order block there. Let's find one that's got a H4 is probably better. Yeah, so that's a breaker block basically. So when price, this candle here closed, and it's important that price has to close at the end of the candle above the order block, we would have got an alert on the screen basically to tell us that a breaker had happened. So here's an example of an alert window I've got running on another MT4. So this is the H4 time frame obviously, but this is basically what the alerts you'll get from the dashboard, which I'll show you in a minute. So when we get those alerts, we come and have a look at the charts and we do a little bit of analysis. So that's market structure explained, so you know how that works. This is the dashboard. So the indicator is placed onto a chart. You can place the indicator onto as many charts as you like. The dashboard that I've developed is basically an overview system. So what the dashboard does is it shows you visually on the dashboard and alerts with pop-ups every time a breaker happens on the 4 key timeframes that I use with this strategy, which is the M15, H1, H4 and daily. So when a breaker happens, you'll basically get an alert pop-up on this dashboard. You can also send out push alerts and email alerts, and it will draw the breaker in here as either a green long or a red short. So when that happens, that's basically telling you to go and have a look at the chart and do further analysis. We've also got lots of other columns here on the dashboard. It will give you the yesterday's high and yesterday's low position at the moment, and last week's low and last week's high. So this is basically it's basically just to tell you whether or not price is currently above yesterday's high or below yesterday's high. One of the key areas for the strategy that I use is I'm interested in previous days areas. So if price is above yesterday's high and it puts in a breaker, there's a good chance there it's putting in an M pattern and it's performed a stop hunt and we're looking for a reversal. So that's one of the reasons I have that visually on the chart. I don't look at it a great deal now, to be honest, these days. I'd rather just go to the chart, do my analysis on the chart and have a good look at it myself. Other columns we've got here is the average daily range. This is the ADR 10 figure. If, again, I'll give you a quick look at the alerts here. This one just popped off. We can set individually alerts to happen on breakers on M15, H1, H4 and daily. We can also have ADR alerts on. We can have peak formation high and peak formation low alerts, and we can choose whether they're pop-ups, emails or push. We can also change the text of them if we want to as well. There's an M15 on US dollar CAD just gone off there, and Euro pound. So let's go and have a quick look at those. US dollar CAD on M15. So when we get a breaker, as we just got here, we got a bullish breaker buy on US dollar CAD. What I will do is come and have a look at this chart, switch over to H4. And just have a look at the H4 chart and just see whereabouts we are. So the last breaker we had on H4, which I use for my directional bias, was bearish. So I would be looking for sell opportunities on this particular pair, not for buy opportunities. So in this particular case, I wouldn't be taking this trade. So what we're expecting to happen, obviously, is when we get a breaker, we're expecting now price to come back down, retest, and then continue back on its way if this breaker here holds. Now, we don't know for sure whether that breaker is going to hold, but the theory is with market structure, we've moved up, we've got a breaker, we should now be looking for it to move down. Okay, so that's the theory. So in this particular case, we wouldn't be looking to take a trade on this US dollar CAD on M15. Now, something else that's quite cool you can do with the order block indicator is, let's say, for example, I want to see this order block drawn on my M15 chart. So obviously you can see when we switch over to M15, we then get the M15 breakers on the chart. If you go to H4 and in the order block, come to visualization, order block breaker indicator, go to visualization, untick all time frames and check the time frame that you want to see displayed on the lower time frame chart. So for example, here I'm doing analysis on H4. You might be doing analysis on daily or on hourly, but I'm going to check H4 here, and you can see the breaker is there. So let me quickly draw in the levels of that breaker, just so you can see it on the lower time frame. So we're on H4 at the moment. When I switch now down to M15, you can see that that breaker from H4 now remains on the chart. If you want to, you can just extend that across in your M15 chart. So one of the cool things about this is that when I'm trading on with the dashboard, what I do is I leave my M15 charts set up to show the H4 breakers. So as soon as I get to this chart and we have an alert on this chart, I can instantly see that the last breaker was a bearish breaker. And if this is a long alert, as we just got here, I'm not interested. So it just cuts down the analysis time. The key rule for me with order blocks is you always trade in the direction of the trend. There's a few examples of when I wouldn't trade in the direction of the trend. If we're getting back to peak formation high order blocks or H4 breaker retests, which I'll explain in a little bit more detail in a sec, but basically you're looking to trade in the direction of the higher time frame trend. So with H4 in this example, we've just had a breaker put in, so we would be expecting now to be shifting to sell orders. But it may not happen, but the rule is I'm looking now on M15 to be taking short trades in this particular case. So that's basically an overview of the order block indicator and the dashboard. I'll just quickly explain these other columns. Obviously ADR on the dashboard shows the average daily range of the last 10 days. I have an indicator on my charts as well. These red lines here are drawn, which is the ADR low and the ADR high. So those are drawn on the chart for me. I also have the ADR numbers up here. If we measure that, we'll see that that is going to be 100 and... oh, hang on, it's away from the high. That is 83. Okay. If we measure from the today's low up to the top one, you'll find that is also 83. So that's the average daily range that we would expect price to move in. So we can see at the moment here we're sort of mid-range, so it could go either way. If I get a signal and price is at or above the ADR, so let's say for example I was to get a bearish breaker signal when price was up here, that's just an extra confluence for me that that's a good place to take a trade. If I got a bullish signal and price was up there, I'd be thinking this is pretty exhausted today and I wouldn't be looking to take any longs. Excuse me. So that's the ADR. ADR, that's ADR divided by 4 basically. This column was put in because I had some people who were scalping using order blocks. And what they requested was to know instantly what the ADR divided by 4 figure was. So the theory behind this is when price gets to its average daily range, let's have a look at one that's already hit ADR today, pound US dollar. Quickly get to that. Okay, so pound US dollar has already hit today's ADR. So the theory here is that when price has got to above its ADR, it will retrace around about 25% of its ADR when its pullback or retracement starts to move for the day. So what we would expect today to happen is price has shot up during the London session, possibly going to consolidation up here, and then retrace around about 25% to end back within its ADR figure. Normally it's somewhere between 25 to 50% is what you could expect from its high. And the problem is obviously with ADR, you don't know if that's the high. New York is going to open in what, about 25 minutes. This could just shoot off up there. We don't know. But one thing we do know is when price does retrace, you typically 25 to 50% ADR is where it tends to pull back to if the market structure is going to shift back down for the day. So that's all that figure is there. Peak formation high, peak formation low on the H1, which is PFH and PFL. This just shows you what the 3 times ADR figure is for this particular pair and how far beyond it or close to it in this case it is. So if we have a look at, let's have a quick look at the pound New Zealand. Got loads of instruments on here, so to find it one sec. Okay. So if we look at the pound New Zealand on H1, we can see that the 3 times ADR is 518 for this particular pair. So we're expecting price to move roughly 3 times ADR. So price, just to explain, price tends to move in pushes of 3 quite often. It's not always the case. Sometimes it will consolidate up and come back down. But if price is going to push and go into a trend, it tends to take somewhere between 3 to 5 days to do that, and it will move in 3, usually in about 3 or 4 pushes. So what we're interested in here is which pairs have got to 3 or more times their normal ADR figure, because we would be expecting price to start consolidating there and building up power to make its next move, which could either be a pullback or a continuation of that trend. So when we get to 3 times ADR, there's 2 ways you can use these columns, these peak formation high and low columns. First way is you will use them to find instruments or pairs, if you like, that are already extended. So you'll use them and hopefully get into the consolidation phase there with either a long or a short way if you're expecting it to come back down or to go long. So it's good for finding pairs that have got a possible reversal about to happen. The other reason you would use this is if you were to get a short, for example here, on the US dollar Swiss, we've had an M15 and an H1 short alert. So it said we've got a short break in market structure. Now we know, sorry, it's the wrong way around. So we know basically that price has moved 130% from its peak formation low, so it's up really high. So this is a good example of when you would look to take shorts. If you get a long signal here, so for example this one, the US dollar CAD, we are 100% of its 3 times ADR. It's 100% of the way away from its peak formation low, and it's given us a long signal. Now that is really already extended, so I probably wouldn't want to take a long when it's already moved so far away from its peak formation low. Let me just quickly draw in what this is. So this is the peak formation low here. Okay, and what we're measuring is how far away price currently is from its peak formation low, and the measurement we're using is 3 times its ADR figure. So for pound New Zealand dollar, it's 173. Okay, times 3, 518 roughly. So we're 117% of that particular figure. So if we look at, what was it? 518. So if we measure 518 pips from here, which is there roughly, so last week's high basically is here. So what it's saying is we are that far on from where we would expect a reversal to happen. Funnily enough, look what happened on Thursday last week. We hit 3 times ADR, we had a lovely pullback. Okay, so that's what PFL and the PFH columns are. So when I get an alert on M15, I come over to my chart, I look at the H4, I see which direction bias is at the moment. So if I had a short signal on the pound New Zealand dollar now, I'd be looking at it saying, no, we've got an order block propping price up here. Our last breaker was going that way, so I'm not interested in taking that short. And that's it. Then I'll simply move on. If, however, it was giving me a long signal somewhere down here, I'd be thinking, yeah, we've got a breaker here. The order block would have been drawn on this candle here, this red one. So I'd be thinking, yeah, we're looking for longs. So I would have taken a long trade there had I had a signal there. Now if we have a quick look, let's have a quick look at that area, which is probably going to be somewhere around there. Let's quickly whiz down to M15 and have a look. So as far as breakers are concerned here, we've got a low, we've got a new low formed there. So we would have had breakers alerted to us on that candle there, this one here. We would have had, when that low was formed, a break. Yeah, so that would have been this breaker there. So we probably would have had a signal on that candle as well. So this one would have been a loser. This one would have been a winner. Okay. because that would have been our order block there on this green candle here. Okay, so that would have been a lovely trade. Looking at, I don't know how many pips. So if we'd have taken the trade from that candle there, we'd be looking at something like 30 pips drawdown. Stop loss would have been somewhere around 50, 55. With 270 odd pips. I mean, we wouldn't have taken 270. If I were taking a 50 pip, I'd be looking for somewhere in the region of 75 to 100 pip target. So I wouldn't have been able to target there. I would have targeted this area here, last week's high. So I'd have got 158 pips out of that trade. So hopefully that explains a little bit more about the indicator and the dashboard. Yeah. That's basically an overview of how I use it. Sorry, one other thing I was going to show you was the indicators that I use. So as I said, I'm looking for confluence when I take my trades. Let me just clear this up. So yeah, when I take a trade, what I'm looking for is confluence. So I like to use there's elements out of the TDI that I like to use, the Traders Dynamic Index. This is used by a lot of traders that trade order blocks. It's a system in itself, basically developed by Dean Malone, but it's very complicated, overcomplicated in my view. But the only elements I'm using of the TDI are the Bollinger Bands and the RSI. I use the TDI Pro. And the reason I use the TDI Pro because it automatically draws in divergence for me. So whenever I look at taking a trade, what I'm ideally looking for is for price to be either at or below yesterday's lows or has swept yesterday's lows. So price does stop hunts, we know that. So basically here you can see a lovely stop hunt of a low. So once a stop hunt has occurred, what you'll tend to see on the TDI is a break of the RSI outside the Bollinger Band and then a close back inside. Some people call this a shark fin. So you see one there, there's one there, bit of a one there, lovely shark fin there. So what I'm looking for is ideally to have had one of these formations appear, which shows me that there's been a forceful move down in price and then a pullback, which typically is indicative of a stop hunt. Another thing I'm looking for is M and W patterns. These are well-known market structure shift patterns, so looking for M patterns to have formed when we're looking for a breaker to the downside, W patterns to form when we're looking for a breaker to the upside. As I said, ideally I'd like to have yesterday's high or yesterday's low swept, which would be ideal. We've got last week's high and low I use as well, because last week's high and low are fantastic areas when price is in consolidation. So we'll often find that price is moving up and down in a weekly range, basically. So when we get up to these areas, if we were to get that sort of structure happen, we've got a breaker on that candle there. Let me just rub that out. That's rubbish. Let's quickly draw this one in. So that's the candle there. So that's our order block on the M15. So once we get a change in market structure there, I'm seeing that we've swept last week's high. I'll be looking for a drop there. When you're trading that sort of move, I mean, we're above ADR as well, which is absolutely perfect if we do get a breaker on that. We've got to move all the way down possibly to last week's low, which is, we're talking sort of 560 pips if you can hold it, which most people won't be able to, but just shows you the power that the order block breaker indicator has when it gives you these signals at these sorts of areas. It can be incredibly powerful. You're going to get a lot of breakers which aren't going to work, so you're going to get a breaker here, and what price is going to do is it's just going to break, come back up, take out your stop, might break again, you'll get in, it'll come back up, it'll take out your stop, then it will go. So it's very, very important that you use a good risk to reward ratio, not with this system, with any system. If you get stopped out twice, who cares? If you're getting a 10 to 1, 5 to 1, 3 to 1, doesn't matter, whatever the risk to reward ratio is, as long as it's above 1.5 or 2 to 1, you're going to be profitable if you're hitting a 50% strike rate. With this strategy, with order blocks on M15 using H4 for directional bias, you'll hit 50%, no problem. So it's just important that you stick to your risk reward. You do not take trades that don't give you a positive risk reward ratio. One thing you might want to do, which is quite handy, the Fibo tool up here, which is utterly useless. Some people trade fibs, I don't, but anyway. You can convert this into a risk reward ratio, as I have. So basically, let's say our stop's there, our entry is there. You can see I've changed mine so that I've got stop, entry, minimum TP, which is 1.5 to 1 risk reward, and then it draws out my 2 to 1, 3 to 1, 4 to 1, 5 to 1. So I can instantly see whenever I'm going to take a trade. I would say in this case I'd be looking for price to move back down to this area of support here. That would be top of Asian high. Have I got a minimum TP of 1.5 to 1? In this case, yes, I have. Brilliant. So I'd take that trade. If, for example, the entry was here on this order block here, for example, that's where our entry was, and that's where our stop loss was, I know I've got to be looking for a target at least here. So I'm going to hit a lot of chop here, possibly not get through it and bounce back, and it'll be losing trade. Also, I could come down to this area of value that the price has traded at before, which would be somewhere around there. So you can take an educated decision. If you want to know how to change the Fibo, if you're just going to your Fibo properties, 0 is a stop, 1 is an entry, 2.5, which is 1 to 1.5 to 1 risk reward, is my minimum TP that I like to trade to. 2 to 1 RR is level 3, level 4 is 3 to 1, 5 is 4 to 1. You can put in as many as you like, obviously, on this. But yeah, so basically that's how you adjust your levels if you want to use the Fibo as a risk reward tool instead of what it's designed for, which, to be honest, I don't use. Anyway, moving on. So basically that's it. That gives you an overview of the indicator on the dashboard. I'm open to questions. If anybody wants to ask any questions on MQL5, just send me a message. I have got the breakertrader.com website as well. There's loads more videos on there. If you're not watching this on the breakertrader.com website, you're watching it on MQL5 or on YouTube, you can head over to breakertrader.com. You'll find loads of other great videos on there about risk reward, trading psychology, a bit more about the strategies, the entries on M15 and H4. I've got loads of stuff on there about light bulb moments I've had over the years of trading. So there's loads of good stuff on there. Go and have a look at it. But yeah, if you're interested, you can buy the indicator on MQL5. It's the order block breaker indicator and the order block breaker dashboard. Thanks for watching. Good luck.